Throughout November and December, ag land tenants and landlords will have the opportunity to attend free workshops aimed at developing fair leases and improving communication. Nebraska's land prices continue to rise, with the all-land average increasing 25% from 2012 to 2013. Those levels could be a concern, with commodity prices about $3 less than a year ago. UNL Extension educator Allan Vyhnalek joined us this week to talk about how lease partners can develop appropriate agreements in a time with persistent volatility.
Yeah, we have to understand that in the last 6 years, land prices have virtually doubled, or have no more than, not virtually doubled, they have more than doubled, and then the cash rents have more than doubled too. So yeah, it's a very volatile market. It's way up there. It's higher than anybody ever expected it to be.
One thing that's different than last year is that there aren't those high commodity prices in corn and soybeans that could support maybe $500 per acre on a cash basis. How do you factor that in when you think about trying to price out that piece of land?
People have been asking me that question, especially the tenants have been asking me that question. They're playing the high rents, and you know, if you want to start with a rule of thumb, and I'm just using this as a starting point, consider that you would want to get about 30% of the gross revenue per acre to the landlord, with no expenses other than their taxes. And so if you took a 200 bushel yield corn times $4 a bushel, which is about what it's worth right now, it's $800 gross, and that times 30% is about $240 for cash rent. Now I know cash rent's much higher than that, but that would be a way of actually using actual production and actual prices to determine where cash rent might be, where we should start that negotiation.
And like you say, it is a negotiation. There's obviously no silver bullet or one formula that works for everyone. So one thing you try and do in these workshops is increase those lines of communications. Yes.
Well, yes, of course, and you know, I gave you kind of the 30% rule, and that's a little bit of a fallacy, because quite honestly, it's still not what some formula says. It still has to be about what the landlord is willing to accept and what the tenant is willing to bid, and it still has to be about the pure supply and demand. And right now, our demand is still exceeding our supply.
When we talked about a year ago in November, one of the things that stuck out to me was when you mentioned how little of the land actually turns over in Nebraska compared to historic perspectives. Does that still stand?
It is for 2013. Now in the fall of 2012, we had a lot of uncertainty about what was happening with our land taxes in terms of estate tax and you know, those kind of things, capital gains taxes for the future. And so there was a lot of sales in the fall of 2012, but the sales have gone flat. As I've talked to ag realtors, we're pretty low level sales for 2013. You know, typically in Nebraska, land would turn over at about 3% a year. So you'd have a particular piece of ground come up for sale about once every 30 to 35 years, and we've been running down less than 1%, which means a particular piece of land won't come up for sale except once for every 100 years. So there's a really tight supply right now.
Is it still a safe investment? You look at all land across Nebraska increased by 25% from last year, 32% and 22% the years before that. Do you still think it's something that is a safe place to put money?
Well, it's obviously not returning what it did before.
Sure.
Because we used to, for a couple of decades, we were running land as a return on investment at 5 to 7%. Now it's dropped to 2, 3, 4%, depending on what you paid for the land and what you have invested into it. So it's a 2, 3, 4% investment instead of a 6, 7% investment. So is 2, 3, 4% a good investment? Well, you know, compared to past savings at 0.15 and CDs at 0.45, you know, and stock market being kind of volatile, yeah, it still cooks along at least some rate.
Now, specifically with these workshops you're holding across the state of Nebraska, what are some things that either tenants or landlords have been able to get out of them in the past?
We did over 20 workshops last year, and we did a 6-month follow-up survey with the folks that participated, and we had over 250 people respond to that 6-month follow-up survey, and they indicated they increased their communication between landlord and tenant. They started to use more written leases. They understood the lease provisions better, so they could ask better questions of each other on the leases. And we had a good understanding of what a flex lease meant, and we had some flex lease provisions put into that, which is being very fair to both parties, both the landlord and a tenant. So people coming to one of these workshops are going to get a wealth of knowledge about what's going on with the industry, how to do proper communication, how to set up that lease arrangement in terms of the contract, and a little bit about flex leasing too.
And your surveys show that after they leave the workshop, people are actually using this information to
Yes,
talk.
exactly. So we're thrilled. And thanks to the Nebraska Soybean Board for providing the grant for us to do these workshops. And we're still using the North Central Risk Management grant too. So we're very appreciative of both groups to provide us the monetary funds to get this done.
The landlord-tenant lease workshops began this week and are being held at 26 sites across Nebraska in November and December. The events are free and sponsored by the Nebraska Soybean Board and the North Central Risk Management Agency. You can find a list of locations on our website. Even though there isn't a cost, you're encouraged to register for the workshops to ensure there are enough handouts.